All right, guys, welcome back to Roxham TV and also welcome back to Jam Crypto. I hope you guys are having a fantastic time wherever you are, whereas Bitcoin is kind of consolidating around 121K to 121K. Not so much is happening, but I'm seeing some FUD on Twitter, like because people are saying that okay, maybe the top is already in. Is that a cycle top? Like, is the cycle top already happen exactly on the 6th of October? Because as we know, there are a group of people who believe that the 4-year cycle is so intact. And actually, from personal experience, because some of my friends, they're really OG when it comes to crypto. I'm talking about crypto, not Bitcoin, because there is a clear differentiation here. Whereas crypto, there is like so much, it's so traumatized. We experienced 2022 and it was no fun at all. So a bunch of my OG friends, they are still very traumatized from that, basically that prolonged bear market we experienced. So because of the 4-year cycle, they believe it's being so intact. They actually took a lot of profit on exactly 6th of October. This is just like some of my friends. But what we're doing here, we're actually using data, using number to back this statement where the 6th of October was really the top. Have we seen the top already? So without further ado, of course, we're gonna dive into the TA, we're gonna dive into the on-chain, we're also gonna dive into the news analysis. Well, so a lot of news from Asia today, because there's something going on in Hong Kong. HSBC is buying some Hang Seng Bank in Hong Kong. Of course, we're going to get into the details. We're also going to look at the China narrative, like the China AI play, because Chinese is actually getting really good at AI and coming very close to actually being an actual rival to the US. So we're going to look into that. Not much Bitcoin native news today, but of course, we're going to look at some miner stuff because mining is always fun in Bitcoin. So if this sounds good to you, make sure you smash up the like button and make sure you subscribe to the Roxham TV channel because I'm doing my show Monday to Friday and I hope to see you live. If not, just replay. I'll really appreciate it. So without further ado, we are on the hourly chart of Bitcoin. As you know, I like to start with the hourly and then we slowly build on the longer time frame. So what I'm seeing on the hourly chart is that we talk about the support range. Actually, like we have been talking about that exactly the day before because I saw the Bitcoin rise to 126K being a really nice rally. So I'll give Bitcoin that. So like a really generous rally from 108K. So that was just like late September. And exactly on 6th of October, we got to a new all-time high of 126K. But just the day before, I was warning about my community and Roxham community about seeing maybe a bearish divergence on the RSI. We're forming a little bit bearish divergence. So I was like warning my community about this. Maybe we're gonna have a tiny correction. Not that is concerning though, but I love how TA is playing out so well because I drew this box like a few days ago between 119K to 120K. So that's a critical range that we are watching. I'm seeing like huge support for Bitcoin. And exactly, okay, when we got the correction from 126K, if we zoom closer, I just love how the candles are touching the level of support that we drew, like this box. So what we are seeing here, we dropped from 125K and then we touched this 120K and then we bounce back off. So that's a really nice range that we spotted. So if any of you guys are trading Bitcoin, then congratulations. And especially if you catch the live stream earlier. So this is the range we are watching. Like I do see Bitcoin might be heading for some more consolidation period, basically bouncing around. The reason why I would say this, okay, first of all, I do see huge support at 120K, but we are not out of the wood yet, because one thing I noticed this morning is that we are also forming this bear flag at the moment. So you see this channel that I drew basically is a bear flag. And what we saw in the hourly is that we lost that bear flag, we lost that support. So maybe we're gonna actually head into this range, so 120, like this rectangle box. So this purple box that we drew. So as the basically retest it and go inside and maybe consolidate a little bit, at least that's what I see on the hourly chart. So if we happen to, maybe we lose this level of support, then as I always say, like the prior resistance is gonna be the future support. So if we, okay, we have to take this again day by day, a little bit data every single day. That's why we're doing this every single day, right? So we're gonna have to take it one at a time. If we lose this rectangle, so 119 to 120, then the next major support that I'm seeing is 117, because that's where we are trading back in literally just the 1st of October or 2nd of October. So if we lose that, but again, let's see. I wouldn't be surprised if Bitcoin going to go to this purple rectangle box, maybe like bounce a little bit and consolidate and find some support there. This is one thing I'm seeing. Okay, that's one scenario. Of course, the reason why I'm saying this, I won't be surprised to have a correction, is because of this bear flag that we are forming here, and we actually lose that support. All right, so that's scenario number one. However, if we are like heading back to, I'll say, all-time high, like what do we need to, in order for Bitcoin to secure new all-time high, new price? So basically we need to see Bitcoin going back to 125K. Like as I always mention, like the prior resistance is going to be, okay, the prior resistance is also what we have to overcome for Bitcoin. Like if we manage to break above 125K, I think it's going to be Bitcoin going to reach a new all-time high like really soon. And remember, this is October, like this is October we're talking about. So October so far, we are generating 7% already. Like I love to see how the October narrative is playing so well. Is it a self-fulfilling prophecy? I don't know, but like it's so interesting to see Bitcoin exactly following the pattern, because October, like we have like 12 months here, and only 2 months out of 12 months, we end up with a negative number. So in other words, October, usually the best month for Bitcoin. So if that were the case, like once we break 125K, it should be like we're going to enter price discovery rather soon. So this is on the hourly, at least that's what I see. But again, there are different scenarios. As I mentioned, we still cannot ignore this bear flag. So what I'm speculating here, okay, right, maybe we hop onto the daily, then we could have a little bit more perspective. And let me go ahead and remove this, because I was drawing a little bit of data here. So like on the daily chart, on a longer time frame, like since we kind of expect, okay, Bitcoin won't be surprised that we go to the rectangle box. So this like level of support, maybe we're going to consolidate a little bit and then retest and then bounce back up. So since the hourly is suggesting that, I think on the daily, because since this daily candle, we haven't closed yet, there is a chance that we might wick and we might actually touch this. We go inside and trade inside a little bit, but let's see if we manage to actually close this daily candle above the rectangle box. If not, then, well, I do think it's going to consolidate a little bit. Like worst case scenario, if we like keep testing 119K, then we eventually gonna go back to the prior support, which is 117K. But that's on the daily. Let's also hop onto the weekly chart and look at things in a higher time frame. All right. As for the weekly chart, things are looking a little bit better because, okay, outly, maybe there is some consolidation we need to do, same as the daily. I'm talking about the coming hours or maybe coming days, right? But like the weekly is giving me a lot more conviction, because I know there are a bunch of people saying that, okay, 6th of October, we are done. Some of my friends actually sold their back. So what I like to use to see, like from a TA perspective, one indicator that we could use is that, okay, let's pull up the 200-week moving average. So what I want you guys to focus is actually the red line here. All right, so the red line here is a 200-week moving average. Right now, we are trading at 53,700, so 53.7K. So the reason why this is important is that, okay, for a bear market, Bitcoin likes to go back to the 200-week moving average. So one thing we could use as a reference is that how deviated Bitcoin is when it comes to the 200-week moving average. So what I would do is usually draw different boxes that represent how high we go from the 200-week moving average. So how you classify that is that, okay, okay, let's do 150. So I'm drawing different boxes from 50% to 100% and 150%. So what this means is that, okay, if Bitcoin is trading inside this first box, so 50%, that means it's that cheap. Like if you see Bitcoin go inside this range, like there is no tomorrow, just like sell everything to get into Bitcoin. Of course, not financial advice, but I'll personally like just sell the bags, sell the house, or like sell the car just to get into Bitcoin. If I see Bitcoin within this region, so 50%, that is that cheap. All right. And then another level is 100%. So that's the second region that we're eyeing. So this is where things are still cheap, not like extremely cheap. Definitely a lot room for Bitcoin to grow. So if we are trading inside this box, so between 80,000 to 108,000, that is still like really cheap. Of course, not as good deal as this, but like it is what it is. And then the third region that we have to look at is 150%. So for 150%, it's basically between 108 to 35,000. So if you can look at if you look at the current price of Bitcoin, we're only sitting at 121, so 121. So what I'm saying here is just we are practically, okay, this range is a little bit expensive, but it's not like euphoria. Because for Bitcoin, we could go from, okay, 200-week moving average, and then we could go all the way up to 200%. So 200%, that will bring us to $162,000 per Bitcoin. So that's like extremely bullish. Of course, like when you hear a number like this, you get really excited. I'm going to YOLO everything. But okay, what I'm seeing here is that, okay, we are currently on here, on the third bar, so 150% away from the 200-week moving average. So we are getting a little bit expensive, but not euphoria. And even within this region, we are essentially just in the mid-range of being a little expensive, but not too expensive. Like if we are pushing to the top, so 135,000, that will officially bring us to the fourth region. So maybe like by then is a good time to take a little bit of profit. But like right now, I am not seeing that from a TA perspective. Okay, this is just the current cycle, and I'm being a little bit more conservative here because like if you go all the way back, Bitcoin has actually pushed even further than 200%. So let me pull up the chart here. So from that was like November 2021. If we calculate from the 200-week moving average to the basically the cycle top, we were 300% away from the 200-week moving average. So that is euphoria. Of course, we have to counter in the diminishing return. So that's why I'm not pushing it to 300%. I'm just using it to 200%. And right now, we are just at the mid-range of basically the third tier. So from a TA perspective, there is still so much room to grow for Bitcoin's price. And this is not just TA telling me this. I'm trying to build a case here that 6th of October, it wasn't the cycle top because some people were really bearish. Some of my friends sold the entire bag. Okay. Another thing I want to look at is actually on-chain. Like, so both TA and on-chain is telling me that we haven't seen a cycle top yet. So what we're looking at, so this chart is the short-term holder MVRV set score. We look at this a few times basically on this channel. So what it does is that basically it measures how stretched short-term investor profitability is relative to its historical mean. It compares the market value of coins held by short-term holders, like those, what classifies short-term holder? Basically, they have been holding Bitcoin for less than 155 days, then they are classified as short-term holder. So the MV to LV, like realized value, like how much money, like the exact amount people are actually paying instead of just like saying that they'll pay, right? Okay, then standardize that relationship by its long-term mean and also standard deviation. High positive readings signal that the short-term holders are deeply in profit and that the market might be overheated, while deeply negative readings, of course, that means most of them, they are in a loss. So this metric essentially help identify periods of euphoria or fear within short-term investor segment and often aligned with local tops or cycle tops, basically trying to spot the turning points here. So that's what we're trying to do. So what this chart, like this one in particular, is telling us is that, okay, so we have 1.5, like 1.5 is like very overheated region. Euphoria, we hit that before, like during cycle tops, and then during heated period, so one SD, we see this metric rise up to 1 SD, so the orange level. So right here where we circle here, basically whenever we get into this region, that means the market is a little bit heated, a little bit. Okay, so currently you see the yellow circle that we did here. So the short-term holder MVLV set score is basically just above neutral. This suggests that, okay, the recent move into new all-time high is not consistent with prior loco and cycle tops. This suggests that there is basically further upside for Bitcoin after the consolidation at this level is over. Like we talk about the consolidation level. Like if you missed that, go back to the beginning of the show. Okay, that's just one metric. And then another one I like to use to back my thesis is the net realized profit and loss. So what this does is basically is to measure the total profit and or maybe loss realized on-chain by Bitcoin investors every single day. It's calculated by subtracting the total realized losses from the total realized profits when coins move on the blockchain. So positive value. So if you see the green region here, it means investors are selling coins at a profit compared to the purchase price, while the red one, so negative values, that means investors are losing money, they're selling at a loss. So this metric basically it captures the emotions, like capture the behavior shift in the market. So large profit peaks often align with euphoria. So you see the region that we highlighted here. So we get to those regions usually is like very euphoria, while like heavy realized losses tend to occur during capitulation events. So here is a very powerful way to actually visualize the flow of profit taking and panic selling throughout Bitcoin's market cycle. So what we're seeing here, there's like a recent spike, right? Like recent spike in the net realized profit and loss. Okay, it suggests that investors are actualizing profit with Bitcoin and selling in the green. Good for them, right? This is to be expected. This is actually to be expected, like during new all-time high moves because we reach 126K. The interesting piece here is that the peak in net realized is actually tamed compared to the prior two local tops of this cycle. Like this suggests that investors are selling in profit, but is in a control selling kind of way. Like you could see the peak is getting smaller, right? So they are selling in a control kind of way because they have conviction that Bitcoin's climbing to higher places. So investors are not panicking. They're not selling out of panic. They are just like taking some of the profit, like realizing some of the profits, and some are waiting and hopeful for higher prices in the near future. So this is what on-chain has been telling us. All right, so that's it for the TA and on-chain. Let's move on to some of the news that kind of like got my attention. So I kind of want to talk about Bitcoin mining, because it's always fun to talk about mining. All right, so one thing that I find it very exciting is that, okay, some solo Bitcoin miner recently hit the jackpot. So congratulations to them. They successfully mined a full Bitcoin block completely on their own. So this means they won't part, so they didn't enter any mining pool or big operation. It was just like one person's machine competing against the entire global network. Like events like this, it happened, but it's like extremely rare. It's not impossible though. There are like several similar wins before, so 15 solo Bitcoin miners who beat the big pool. So there are cases like this before, but like it's quite rare. So back in September, for example, like one solo miner using about 200 terahashes per second and managed to mine a block through Solo CK, and earning about 3.125 BTC plus transaction fee. So roughly that is 348,000 at that time. So these stories, of course, it's going viral because they highlight Bitcoin's decentralization. That's the beauty of Bitcoin. Like even though industrial farms dominate mining with hundreds of thousands of ASICs, and regular person with only one good machine can win the entire full block reward. So that's very fascinating. Like if you guys are not very familiar with mining, so basically like mining a full block is like a lottery. So every 10 minutes, miners race to solve the puzzle. So the first one to solve it will earn a new block added to the blockchain and get rewarded right now is 3.125 BTC plus fees because of the halving, right? So if you earn one full block, is equivalent to 380,000. So of course the reward cut in half every roughly 4 years. That's how Bitcoin mining works. So to keep block times steady at 10 minutes, so the Bitcoin network automatically adjusts its difficulty every 2 weeks with a total network hash rate over 700 exahashes per second. So that's like 7 quintillion guesses every second. So the competition is massive, like 700 quintillion guesses. And they managed to hit the jackpot. They are solo Bitcoin miner. That's so crazy. So solo miner is someone who connects their ASIC directly to the Bitcoin network, not through some mining pool. If they find a valid block and they keep they can keep the entire reward. Like if not, they earn nothing. It's all or nothing, just like buying a single lottery ticket. So right now, usually like solo miner, they are not profitable anymore unless you get extremely lucky. Like these guys, like 15 solo miners, they are. So, or maybe unless you get like free electricity, because as ASIC running nonstop, it consumes around 30,000 kilowatt per year. And at a 15 cents per kilowatt, it would bring us to about like 4,500 a year in electricity alone. And then the machine, it may cost like a few $1,000. So if you win once, of course, like these guys, they're earning more than 3 Bitcoin, then they're doing extremely well. That covers like decades, of course, but like statistically, you may never get to win. So that's why people would enter some mining pool. But like I do know some of my friends, they are individual miner, they're solo miner, just because they want to support Bitcoin's decentralization. So like joining a pool, it makes a lot more sense because the income is steady and predictable. Some of my friends, they have Bitcoin farm in some countries. I'm not going to dox them, but like in some countries. So what they share to me is that like right now mining is getting less profitable, but like these individuals are extremely lucky. So yeah, congratulations. And like event like this, it kind of remind us, like it proved like Bitcoin's core principle of decentralization is very much alive. Like no matter how powerful big mining operations get, the system's design allows anyone, even like one person at home, to compete and win. So that's the beauty of Bitcoin. All right, so we're gonna take a little break, but we're gonna come back in 3 minutes. And then because I need to grab some water, but I'll see you guys in 3 minutes. I'm going to bring you some news in Asia, in China, and also in Hong Kong, because something basically very interesting happened. So I'll see you guys.
The future of capital markets runs on Bitcoin. Introducing Roxum, the first ever exchange where Bitcoiners can trade treasury stocks entirely in BTC. Get exposure to top Bitcoin holding companies like MicroStrategy and Metaplanet, priced in Bitcoin from the start. No fiat, no middlemen. This is what financial freedom looks like. Early access now live at roxum.com/treasuries. Built by Bitcoiners for Bitcoiners.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin?
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, guys, so welcome back. Next one, we also going to head into the Asia. Well, what's happening in Asia? Because like some breaking news in Hong Kong, so about HSBC. So of course, HSBC is one of the world's largest banks. They literally just announced, so 2 hours ago, they announced they have planned to privatize its longtime Hong Kong subsidiary, so Hang Seng Bank. So they proposed a deal. So they're going to value Hang Seng Bank at 290 billion Hong Kong dollars. So right here, 290 billion Hong Kong dollars, which is about 37 billion in US dollars. So in plain English, is that HSBC wants to buy out all the remaining public shares on Hang Seng Bank, making it 100% owned by HSBC instead of a partly public company listed on the Hong Kong Stock Exchange. And when this news broke, of course, people were really happy, and Hang Seng Bank shares jumped up 30% after the announcement. Investors were so thrilled about the premium offer price because for the holder of Hang Seng Bank, they got a premium. And however, HSBC, basically HSBC owned shares, they fell 6% because they weren't happy. Okay, why do we have to pay a premium to privatize the bank? All right, so if you guys are not very familiar with the Hong Kong market, basically, Hong Kong market is huge. The Hong Kong Stock Exchange is one of the biggest in the world, with over 2,600 listed companies and a total market value of about 34 trillion Hong Kong dollars. So usually Hong Kong acts as a global bridge between China and the West. And the Hang Seng Index, because I'm sure you guys have heard of the Hang Seng Index, it named after Hang Seng Bank, so that's the one, Hang Seng Bank, is the main benchmark tracking top Hong Kong companies. Basically, think of it like Dow Jones in the US. So more than half of Hong Kong adults invest in stocks. So a move like this, especially involving a historical local bank, it really does capture public attention locally in Hong Kong. All right, so why HSBC would do such a thing? Okay, HSBC is actually facing some different challenges. Like there are geopolitical tension between the US and also China. It makes like HSBC kind of like the West and the East balance a little bit tricky compared to before. And HSBC profit had slumped in Hong Kong due to property downturns and regulatory challenges. And as for Hang Seng, so Hang Seng, just like other local banks, it has been hit hard by the property market. Real estate prices have fallen over 20% since 2022. So bad loans are actually piling up because borrowers, they kind of struggle to repay. So why this move now? Why HSBC is buying is subsidiary. So HSBC actually own most of Hang Seng. So it's just about tightening control and simplifying the structure. By taking Hang Seng private, HSBC can quietly manage Hang Seng's loan issues without public scrutiny. So the deal, the details is here. They are paying 155 Hong Kong dollars per share, about 30% of premium, so 33% premium, and costs about like 13 billion USD. This is still in proposal. We need like months for like basically shareholders and court's approval. And HSBC is saying that the brand, so the name Hang Seng Bank, will remain the same because like everyone in Hong Kong knows Hang Seng Bank already. So it's difficult to all of a sudden to switch names. So why does still matter? Because for HSBC, this is a strategic power move. It consolidates control. It reduces kind of like reporting costs. It also shields Hang Seng's financial from public markets while giving HSBC a little bit more flexibility in managing Hong Kong's kind of troubled real estate exposure. And for Hong Kong's banking system, like this would be the largest banking privatization in Hong Kong's history. And it shows that big institutions still value in the city despite property and capital flight concerns. So it might help stabilize confidence in the sector, but it also means fewer public investment opportunities since another major stock would just disappear from the exchange. So for investors like Hang Seng shareholders, they're really happy. HSBC holders, not so much. But there's still risk involved. So if for Hong Kong, so if real estate basically the loss deepen, HSBC would basically they have more risk after the full ownership. And if the deal fails, because right now it still takes time, like months for this to actually happen. So if the deal fails, it could really rattle Hong Kong's the quite fragile investor confidence. So the final takeaway, like this is more than just a bank acquisition, it's a strategic alignment, like realignment of one of the world's biggest financial institutions, and HSBC is betting big that Hong Kong will rebound. And that tighter control over Hang Seng Bank will strengthen its Asian foundation. Basically, in a time when global banks are downsizing and crypto projects chase decentralization, HSBC move kind of remind us that TradFi is consolidating, not really disappearing. It's evolving to survive this new financial era. All right, so that's for Hong Kong. Let's also move on to China. I kind of want to focus on the AI aspect today. Like this is not particularly new, but it has been brewing for the past few weeks. And I kind of want to offer some of my own perspective about the AI competition between US and China. Because like US and China, they are on a tech cold war. It's like a geopolitical struggle over who leads in the most powerful technologies for our time. So AI, semiconductors, quantum computing, and 5G. The US see this as basically a strategic national asset, essential for both economic and military dominance. China is pushing harder for self-reliance under initiatives like Made in China 2025. So the rivalry has now evolved into a chip race, like because AI chips are the engines that power everything from ChatGPT to self-driving cars. Nvidia currently dominates the global AI chip, but China is catching up fast. Like ironically, America bans, like it meant to basically slow China, but end up they're pushing China to move faster to have the own chip. So how did we get here? Let's look at some timeline. So actually back in 2022, so it has been some time like brewing for quite a few years. So the US began this like restriction, like restricting export of advanced AI chips like Nvidia's A100 and H100 to China. That was back in 2022, saying because of national security concerns. Nvidia responded by designing a so-called weaker version, such as H20 is like 20% less powerful, to comply with the US rule. So during this time, China started banning American chips in government systems and investing billions of dollars into local chip makers like Huawei and Cambricon. So by 2025, of course, we had the new administration, so Donald Trump. So actually in April, so Donald Trump imposed a ban on the sale of all AI chips to China, even including the so-called weaker chip, so H20. So sending a really strong note to China. But because, okay, in July, after like lobbying from the semiconductor industry, the Trump administration reversed course. It approved the licenses for Nvidia and AMD to resume shipping H20 chips to China. And Nvidia even like developed a new chip for China, is the B300. So that was in August. But you know what? Here's the twist. China was like, nah, we're good. Like, we don't need you anymore. Because China itself, they started discouraging domestic firms from buying American chips. Like, they're saying to the Chinese firms that we prefer homegrown technology. And Huawei, meanwhile, prepare to mass produce this like Ascend, where is it? So Ascend 910C. 910C designed to compete directly with Nvidia's H20. Well, I would say the competition is really keen, and China is really being a major rival to the US. Of course, like there is still maybe a little bit behind, because you still see headlines like this. So TSMC and Samsung components still found in Huawei's Ascend 910C. So there's still titles like this, headlines like this, but China is improving fast. So I would say like China, this move, why China is saying, okay, yeah, we're good. I don't think this is a retaliation. I think it's showing confidence. Like regulators declare that Chinese chips like Huawei's Ascend and Cambricon's, basically the latest processors, were now comparable or even better for domestic AI needs. So that's for the 910C, but they are also developing the 910D, and they are saying, okay, that's what they claim is like basically on par or even better than Nvidia H100. So we'll see about that. But I'll say a lot of these like Chinese AI chips, they are quite good. Like they are good enough. I'll just put it that way. They're good enough. So Huawei, the 910C, they now match around like 80 to 90% of Nvidia's older A100 and H20 performance. For like running large language models, so LLM and everyday AI tasks, they actually deliver comparable results with better energy efficiency. And companies like Cambricon, they are making serious progress in specialized workloads. And when they are building chips within the country, so locally, they can actually specialize. So they can create the chip more suitable to the local market, so to the Chinese market, because they have to train everything. So I think, okay, China manufacturing still lags, but like for most of the Chinese chips, they are built at 7 nanometers. Like when you compare to Nvidia's chip, the newest one is 3 nanometers, so 3. So China still need to catch up in terms of the hardware, in terms of the chips, but like software-wise, like the Chinese is doing, I would say, surprisingly good. Like we don't need to remind, I don't need to remind you guys about the DeepSeek, right? So like when DeepSeek broke out, even hardware, China is lagging behind, but like software, they're catching up at a rapid pace. And in terms of the hardware, like the chips, so in 2024, domestic chips like made up around like 14%, 14% of China's AI market. In 2025, the number jumped up to 34%. So the government right now is aiming for a 70%, so they can be self-sustained, self-efficient, sufficient enough by 2027. They're aiming for the number like 70%. So this does really matter globally. Like for the US, like of course, Nvidia still dominates globally, but it's losing access to a huge slice of the Chinese market. Even though some restrictions were lifted, the long-term impact is that China no longer wants to rely on US chips. For China, the bans actually became the fuel for acceleration. China is now building its own AI ecosystem, like chips, framework, software. They are like all independent of US technology, and the rest of the world, we're just like watching the arm race between US and China. But like I will say the final thoughts when I see news like this, okay, the chip war has entered a new phase. The US tried to limit China's progress. So based on the timeline that we're seeing here, that's what they did back in 2022. But instead, they accelerated it. So now China is banning US chips, not out of necessity, but they out of strength, basically, I'll say. And Nvidia, despite still being the global leader, they kind of face the real risk of becoming Nvidia is like in between US and China. Nvidia is in a difficult position because Nvidia is being used by Donald Trump as one of the strategy to attack China. So yeah, a very interesting place for Nvidia to be. Like the next battleground, probably robotics, like humanoid robots. Again, we talk about that in yesterday's live stream. I actually cover that extensively in one of the video I did on Gemcom Crypto. It's like a 15-minute video, so make sure to watch that if you want to learn more about what are the brands when it comes to humanoid robots, what are the stuff that you could invest in, and also like the next battlefield, I would say like quantum computing and biotech, all powered by AI chips. So that decide not just how smart our machines become, but also who controls it. So we are watching this like battlefield very closely between US and China. Once we get, because like I love AI, like I love giving updates about this area. So if you guys want to learn more, just let me know in the comments. So yeah, or maybe like what sort of topics you want me to cover. But we are reaching the end of today's live stream. Just before you go, just a final call to action. Make sure to follow me on JamJamCrypto_IO. So I post like updates like this because it's the fastest way for me to let my community know about certain stuff, some new updates. And then make sure to also follow Roxum TV on Twitter as well. So we are going live here. So yeah, feel free to follow because we have a lot of like updates about Bitcoin, about macro, about the market. So thank you so much for watching. Again, my show is Monday to Friday, 4 a.m. Eastern time. If you could catch it live, that would be great. If not, like feel free to watch the replay on both Roxum TV and on Jamjam Crypto. So thank you so much, guys, for watching, and I will see you guys tomorrow.